Good afternoon and welcome to the Intelligent Ultrasound Group PLC full year results investor presentation. Throughout this recorded meeting, investors will be in listen-only mode. Questions are encouraged and could be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Stuart Gall, CEO. Good afternoon.
Thank you, Paul, and welcome to our annual results. So we've split this into two sections. I will be taking you through the first bit, general summary of the business, how we're doing, and then I'll be passing over to Helen, who will take you through the numbers in detail. Okay, so just a reminder for people that don't know us, what we do. We are a specialist ultrasound company. Our purpose is to make ultrasound, which is the world's fastest, safest and cheapest imaging modality, easier to learn and simpler to use. And we do that by building and selling a range of high fidelity, ultra realistic simulators to teach doctors how to scan with ultrasound. And then we follow those clinicians into the scanning room and give them AI-driven tools to enable them to scan patients faster and better. And we ultimately hope to be at the forefront of using AI to enable ultrasound scanning in primary care and potentially at home to enable ultrasound for all. Okay, so just a quick summary of 2023. Financially, group revenue grew by 11% to 11.2 million. Importantly, clinical AI related revenues trebled to 2 million. And although there was a slight decline in simulation revenues over the year, if you look at like-for-like sales, those revenues did actually increase, and we'll talk more about that later. Our loss after tax decreased to 2.6 million, and our cash at the end of the year was 3 million. There's quite a lot of things happened, I'm pleased to say, operationally and both post-year end. So I'll take you through the details of that in the following slides. So just to recap why we're in ultrasound and why we think this has got an exciting future. If you think about X-ray, which really started this advance about how we look inside the human body, of all the available imaging modalities, X-ray, MRI, CT, etc., ultrasound is the fastest, the safest and cheapest of them. And its diagnostic applicability is in many areas well recognized and growing, okay, all throughout hospitals. But unlike X-ray, etc., it is dynamic, it's a real-time modality, and the skills of the operator are paramount. It's a difficult skill to learn. And that's why our vision is to help make ultrasound easier to learn, simpler to use by minimizing this obstacle. And we do that through something we call classroom to clinic. We think it's a unique approach. And for those of you that may have known us from 2014 when we first listed, we actually had one product in the marketplace, Scan Trainer, and it taught you obstetrics and gynecology ultrasound scanning. But if you fast forward obviously to today, 2024, you can see just how much we've grown in the business in terms of the product range that we've got. 6 simulators that can be sold into the simulation environment, the educational classroom. And then now we have 4 products, 2 launched and regulatory approved, 1 pre-regulatory approval and 1 in proof of concept development on the AI side. I'll just talk about all those in a bit more detail now. So importantly, from a revenue perspective, we are seeing our AI side, the clinical side of the business, beginning to take off. Sales, if you look at the orange part of that graph, as you can see, 2021 starting to sell, and now 2023, obviously trebling revenue from 2022 to £2 million. We have a forecast in the marketplace for the group, which is Cavendish have got a forecast in at 15.6 million. We have put a range out saying it's between 14 and 17 million, and I'll explain the reason for that in later slides. So in some more detail, the simulation side of the business, as you can see, revenue has grown over the last since we listed. If you look at 2023 and compare it to 2022, it was actually pretty flat. But what I've done here in the graph is to actually show how the sales have grown since last year if you remove the £2 million of revenue that was a one-off sale. So that was the sale. I think we talked about it at the middle part of last year and the end of this year. Health Education England, there was about £2 million of sales into the UK that really were a one-off. And so when you take those out of the revenue curve, you can see that we've grown sales in 2023. I think importantly, this is still a market that's got a lot of growth potential. It's well over £100 million market. There are literally thousands of hospitals in the US, UK, Europe, and obviously we're at the moment only in 800 of them. So there's plenty of scope to grow this business, which we fully intend to do over the coming years. And as such, we have continued to develop our products. We have 4 main simulator platforms that we sell. We have Bodyworks, which is all about POCUS scanning, that we relaunched with a 4.5 version this year. We added Lines and Lung to our BabyWorks pediatric and neonate simulator. Our HeartWorks product, we added e-learning to it. And then finally, Scan Trainer, our first OBS and Gynae product. We launched a new product for endometriosis this year. And this is, I think, a really important area. It just shows how we try and target new areas of the marketplace, be first into areas which we think have got growth, but also do a really important job in terms of teaching doctors how to scan. In this case, for something that affects 10% of women worldwide, is the UK's second most common gynecological condition that impacts considerable numbers of women around the world. And unfortunately, on average, takes 8 years from the onset of symptoms to get a diagnosis. So anything that can be done to help people learn how to make earlier diagnosis, we think is both a good thing and potentially should enable us to sell more of our Scan Trainer simulators through 2024 and 2025. So moving to the clinical AI software side. So this is the bit of the business that we moved into in 2017. We believe this is a potentially large market. It's one of these areas that's got considerable potential growth. AI is now involved in almost every area of imaging. You can see the global imaging market for AI is expected to be over $20 billion. AI in ultrasound seems to be at least 1.3 billion, and we're expecting to have products that will generate material revenue in this space. So we've done that by basically really building on our clinical AI capability. We've been doing this for the last 4 years. You now look at the revenue starting to grow from 21 from a small base, but actually 2023 trebling sales and forecast that they're going to double this year. And we're doing that with 3 products in the marketplace, 2 that are purely AI and 1 that's a hybrid product. And I think importantly, 2 products in development. And if you look at the number on the bottom right hand side, we've now got over 60 million images in our database. Okay. And it's that sort of quality of images that enable us to quite quickly now develop new products into the market. So the first of those, the first pillar of our AI sales is our relationship with GE. We have a 10-year exclusive agreement with GE for our AI products in women's healthcare. The image you can see on the screen is for the new Sonalist Live software that is embedded in the Voluson Expert and Voluson Signature range of ultrasound machines. It's the world's first fully integrated AI tool that automatically in real time recognizes the 21 views that you need to see during a patient scan at 20 weeks. And this is a difficult scan. You've got to get these images and they've got to be taken correctly. They've got to follow a protocol. And what our software does, you can see the image on the main part of the image, the black and white image of the fetal head there. And what our software does is literally it's analyzing almost every slice of that ultrasound as you're scanning. And if it sees, in this case, a fetal head, it freezes the image, it checks, does it meet the protocol? And the protocol there you can see on the right-hand side. The protocol saying, can you see the brain symmetry? Can you see the cavum septum, cerebellum, cisterna magna, midline, and is the magnification correct? And if you've done all that, the system gives you a green light, these green ticks, and then you can see the little schematic on the right-hand side enables that sonographer to track how they're doing in terms of obtaining all the 21 views that are required, because that automatically goes green with a little audible beep. So the product pretty dramatically reduces the number of keystrokes that a sonographer has to do to get an image. It reduces the time to scan, and really importantly, it de-stresses them because it's giving this support tool live to them while they're scanning. Now I've got a the next image is, unfortunately, this is a video. So unfortunately, it's not going to run this presentation. But what this is would be showing you on the in a normal video run is on the left hand side is a sonographer scanning without Sonolist, and on the right hand side they're scanning with Sonolist. And the video shows basically just how few keystrokes the Sonolist operator has to use and how much quicker they are at scanning. And the important thing about that is that it basically, as I've said, standardizes scanning, speeds up scanning, and de-stresses scanning. Now, GE's got about half the marketplace. This is a product that we think absolutely will keep them with that market share. We are now on the Expert range. If you look at the middle column there, the Voluson range, they broadly split into three areas. You've got Expert, you've got Signature, and Swift. The Expert's the top high-end, big, scanning medical imaging centers. Signature is aimed more at the National Health Services, the NHS being a good example, and then the Swift and the Performance are at sort of the mid to lower end. GE sell about 15,000 machines a year, and this is broadly splits 1/3, 1/3, 1/3. We are now standard on the Expert 22 and 20. We're an option on the Expert 18. We're standard on the Signature 20, an option on the 18, and we're an option on Swift. And this means we're going to have much more predictable revenues coming in from GE as these products are now rolled out. So they're live, CE, FDA approved, and on sale in Europe and America and the rest of the world. And as those sales start to ramp up, we'll start to see material growth in our GE revenue numbers. So very important pillar. It's been an excellent relationship to date. And now we're going to start seeing that from a commercially beneficial point. So second big area for us are these two products here, which is on the right hand side is our needle trainer device, and on the left hand side is our ScanNav peripheral nerve block clinical AI software system. So this is our classroom to clinic for peripheral nerve block. Two parts, needle trainer, first of its kind. This is basically enabling any clinician to learn how to inject a needle into a live patient, because you train on a live volunteer. The needle doesn't actually go into the patient, but on your ultrasound image live, you see the needle as if it was being injected into the person. So really clever tool to develop hand-to-eye coordination, optimum positioning, accuracy, but all under realistically clinical environmental scenarios with minimal risk. So normally you would have to do this by learning on a phantom, a silicon block, potentially on a piece of meat. None of that's as realistic as scanning a real patient. So really clever piece of technology that we're looking to sell into all of the simulation centers and all of the clinical departments that do needling. And what's clever about this is that we've overlaid our AI technology on there so that not only can you simulate the needle in, you can see exactly highlighted in color the areas of anatomy that you want to inject or aspirate. So if you look at the next slide, this is about our clinical AI product. So in the middle is a little cart. It's got a second screen. You plug this device into your existing ultrasound machine in your department. It goes into the operating theater or block room for doing the blocks. And this is basically all about giving you color highlighting live as you scan. So the image on the right hand side, you can see the top half is all in grayscale. The bottom half is colored. And so we provide you with the colored image. They're showing the muscle, showing the bone, and clearly defining the different elements of the anatomy in color, so you can see where to place the needle in something that's very hard to see in normal, just grayscale. Now, we've spent the last 12 to 18 months building up all the evidence that's needed to, in effect, change the medical pathway. So we're all about basically enabling a trainee anaesthetist to learn with confidence, to help more qualified anaesthetists to conduct more peripheral nerve blocks, and then help increase the number of peripheral nerve blocks per hospital. Because if you can do this, it saves the hospital money, it saves the hospital beds, it's better for the patient, everything's quicker. So the study that we've been producing over the last 12 months have shown how the product is helpful in identifying the anatomical areas, 99.7% of cases, that it's 99.3% correct in terms of the ultrasound view being confirmed, and importantly showed a 40% increase in the delivery of ultrasound guided regional anesthesia. So this is the data that we're now taking out to market to drive sales growth of our peripheral nerve block ScanNav P&B product into the UK, into the US, and in the countries in Europe where we're allowed to sell it on a regulatory basis. So we have 2 new products in development. ScanNav Liver, that we signed a deal with Dundee University end of last year. It's given us access to a really rich database of over 1 million ultrasound images from about 50,000 patients from the university and the NHS Tayside. And it's all about us creating machine learning models that can make it easier to stage liver disease and monitor disease progression. It's a big issue, chronic liver disease. It is something that you can stop. So there's a huge amount of money being spent by the drug companies, pharmaceutical companies, to have drugs that can reverse chronic liver disease. And this is a device that we believe will have the ability to give you the ability to monitor that progression and therefore monitor the drugs that you're delivering in. We're obviously just at proof of concept stage, but we see this as being one of our big future products that will come online in the sort of next 2, 3, 4 years. Now, something that's already out on a quicker development pathway than that is ScanNav Fetal Check. This is a new development program we launched in November, announced in November. It's all about gestational age. So this is getting the age of a baby in prenatal care. And our product enables a non-skilled or skilled user to establish what the gestational age is accurately with minimal training. We have a device you can see here on the left that has been purchased by, funded by the Bill and Melinda Gates Foundation into a large number of trials in Africa. It's now in Ghana, Rwanda, and Uganda. It's being used live to assess the age of a baby in the field by people that have never touched an ultrasound probe before, but it gives you the fetal age. And it's used to trial the use of aspirin to prevent preeclampsia. And so our product's been used to give the age element of that trial. So we think this has got clearly a lot of potential in the marketplace. We're working on what the commercial model is now. Clearly, having products in trial in the field is a great first step. And now we're working how we deliver this both in the developing world, but also where we can take it into the UK, US marketplace, where if you can give a handheld device that automatically tells you the age, fetal viability, and whether it's twins or a single birth, and that can be done basically by a midwife, whether it can be done by a family practitioner or in the hospital in a fully automated tool, we think there's tremendous potential for that going forward. So these last 2 products are why we think actually our vision of classroom to clinic and potentially consumer actually could happen over the coming years. We're already in the first simulation market. We've got 2 to 3 products now in this new clinical market, and we see the gestational age and liver as being able to take us into the primary healthcare and then potentially the worried well scanning markets. So a few slides now just to say ESG. There will be a full ESG report in our report and accounts that will be issued in the next 2 weeks. We have reduced the environmental impact of packaging in terms of how we ship our products. We've continued to increase the number of web-based demos to reduce travel. That has had an impact in terms of our numbers. And pleased to say that, again, 100% of our CO2 equivalent greenhouse emissions are being offset through our partner in this, which is Climate Partners. Board changes during the year. Ian Whitaker, who was Chief Operating Officer, he chose to retire from the board. He does remain with us in a part-time capacity to assist on projects as required. We'd clearly like to thank him for all his work in growing the simulation business. And at present, Ian's full-time role and position as director is not going to be replaced on the board. And finally, from my perspective, current trading and outlook. This is just to touch on where we are, from the end of last year to the beginning of this year. We've got a tight control on costs in 2024. I think the start of the UK market, the 2024, has shown, it is tougher trading out there in the UK. There is the impact at the moment of the reduction in NHS capital expenditure spending. This is in part caused by the huge cost of having to cover junior doctor strikes by paying consultants to cover their time. That has impacted the amount of money that's available. I don't think just in training, lots of medical companies have seen that the UK is just tighter at the moment in terms of getting funds, especially if you want capital expenditure purchases. But because of that, and right from the beginning of the year, we said, right, we're going to keep a tight eye on our costs. just in case there's any softening in UK revenue. So while we do ascertain, we're looking to see what is the impact in the UK. I think we'll have a better picture in Q2 at the end of this quarter. But in the meantime, as a precaution, we've been keeping a tight control of costs so that any reduction in NHS spending is mitigated. And so when you combine that with the growing revenue from high margin AI related products, growth in non-UK related simulation markets, we continue to forecast revenue in 2022 being between 14 and 17, and that we will reach profitability with our current cash resources, whatever part of that range we're in. Okay, so that's my section over. I'm going to hand you over to Helen, who's going to take you through the results in more detail on the numbers.
Yeah, thank you, Stuart. Good afternoon, everybody. So overall, we continue to deliver a positive financial performance in 2023, increasing our group revenues by 11% to 11.2 million and reducing our operating losses by 18% to 3 million. With continued operating cash outflows of 1.2 million and timing of orders impacting working capital, though, we had a net cash outflow in the period of 4.1 million and ended the year with 3 million of cash and cash equivalents. So just starting, would you drive the slides, please, Stuart? Yeah, thank you. So starting off with revenues, just as a summary of our growth over the last 3 years from 2021. And really, just to say that one of our strategic aims was to grow the clinical AI revenues into the millions. And in 2023, we achieved this with the clinical AI revenues trebling to 2 million, which made up 20% of our total group revenue in the year. So although simulation was down on year by 3%, as Stuart's already said, if we adjust for the large NHS exceptional orders we saw in that year, simulation actually grew by 21%, with good growth in North America and in our rest of the world reseller network region, which was offset, however, by a drop in revenue from the UK. So just looking at the split it by clinical and simulation revenues separately. So just starting off with simulation, the positives in the year was that our North American market revenues grew by 62%. This market is a key region for growth for us. And over the past couple of years, we've expanded our sales and sales support teams there, as well as focusing specifically and heavily on marketing and product management in those regions. And that started to kind of take fruition this year with that growth. In the rest of the world region, our revenues grew by 31%, so back to 2021 levels. There's still some challenges in various countries, particularly China and Western Europe, but we saw good growth in other regions, so positives and negatives in that region, but really good sign of growth continuing in those regions in the second half of the year, which we're hoping will continue in 2024. Okay, as Stuart's already said, oh sorry Stuart. The UK revenues were half of those in 2022, but if you take out those exceptionals, that does come down. The UK has been our strongest market over the last couple of years. There's been lots of budgetary availability, which we've been able to benefit from. But unfortunately, latter half of 2023, there's been a number of factors that have impacted those budgets and therefore our revenue. So first of all, the NHS had to implement cost savings to cover the increased cost of doctors and overtime caused by the strikes early during the year. And then secondly, there was a merger of Health Education England and NHS England, which was one of the biggest sources of funding for simulation in the NHS. So all this combined has meant that there's just less funding available for training. There's still significant purchasing interest in our products. There's a good pipeline in the UK, and we're just monitoring closely whether those shortfalls will impact the 2024 training budgets and our forecast. On a positive note, simulation margin remained consistent year on year with a more favourable product mix, which shielded some cost of goods inflationary increases. On the right-hand side, you've got the clinical AI revenue stream. As I've said already, the revenues trebled over 2 million. So you've got a mix of 100% gross margin royalty income from GE, And then we've got our own products, Needle Trainer and PMB, which we sell direct and for our resellers. And you can see that in the UK and NA, where we sell those direct, we've got really good growth in sales across those. And then the rest of the world region, that's where we've got the GA revenue, the GE revenue, and NT and PMB revenues. And we're some of the ScanNav Beetle Check revenue we were able to recognise at the end of 2023. So that's contributed to that large 382% growth that you see on the right-hand side. So just looking at the P&L and in particular the overheads. So our P&L costs in 2023 stayed virtually the same as in the prior year at 9.9 million. But we do have costs that we put onto the balance sheet, the capitalised R&D. So if you take that into account, our costs increased by 400,000 to 11.7 million. So part of this was due to high inflation during the year, in particular staff costs, which make up 60% of our total overheads. Staff costs had an 8% increase at the start of the year. And then we also saw inflationary costs affecting our G&A costs with legal and professional audit, tax fees and insurance as well. So just moving down onto the balance sheet. So our net assets at the end of the period were 9.7 million, so a reduction of 2.5 million. Part of that is down to the cash movement in the year, offset by movements in trade and other receivables. And that does, as I said at the outset, the working capital movement does impact our cash flow. So in the next slide, just to illustrate how this happens, I've split the year into the first half and second half. And our total cash burn for the year was 4.1 million, of which nearly 4 of that was in the first half of the year. So even though our EBITDA loss was only 600,000, cash flows in the first half were impacted by adverse working capital movements due to timing of orders and the profile of stock ordering. So we had unusually low trade debtors at the end of 2022 and then high trade debtors at the end of June due to a lot of orders closing in that last month. That unwound in the second half of the year, but we also had a large number of orders, as we traditionally do at the end of the period. So the full year working capital impact on cash was 1.4 million. So net cash burn in the second half of the year was only 300,000. As we also received the R&D tax credits of 700,000, and we also undertook a review of our kind of stock working capital management just to change some of the more negative impacts on our cash flow. So we're monitoring closely our current trading, all the pipeline estimates, development costs, our overheads, revenues, and budget climates in various markets. And we're running regular scenario modelling to make sure that we can model various different scenarios to assess our cash resources and make sure that we're able to get to profitability with the current cash, and the range of forecasts that we've got out in the market hasn't changed. Post year end, though, positively, we secured an overdraft facility from HSBC for £2 million, which does give us additional liquidity to support our working capital needs if required, although we're hoping we will not need to access that facility. We continue to monitor our overheads and run different forecasts and would update the market immediately if anything changed. So I'll hand back to Stuart to summarise. Thank you very much.
Thanks, Helen. So yes, I think in summary, look, I think we're remain in an exciting and dynamic market. We've got 3 clinical AI related products out selling commercially and regulatory approved. They are growing revenues now, and we can expect to see that continuing with what we're expecting to be a doubling in 2024. Got a strong simulation portfolio, established sales network, so everything's in place to grow this business. As I say, we do anticipate revenues between 14 and 17 in 24, with a material contribution from AI-related sales. And based on that range, our current cash resources are expected to take the group to profitability. So that concludes the presentation element of the meeting.
Fantastic, Stuart, Helen. Thank you very much indeed for the presentation. Ladies and gentlemen, do please continue to submit your questions just using that Q&A tab situated on the right-hand corner of the screen. Just while the team take a few moments to review those questions submitted today, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Stuart, Ellen, as you can see, we've had a number of questions throughout today's presentation, and thank you to all the investors for submitting those. If I may just ask you just to click on that Q&A tab, and where appropriate to do so, just read out the question and I will pick up from you at the end.
Thank you. Okay, so first question comes from William. Hi, can you explain the very large rise in rest of the world AI sales in the second half, please? UK and US growth was still high, but more modest. That's the first half of the question. Yes, so we can explain that. One of the reasons, there are a few reasons. One is that we allocate sales according to the invoice, where the invoice originates from. When we're selling to someone like GE, we can't tell where the end sale is, so we can't reallocate. So we have to allocate that revenue according to where they invoice us from, and we get invoiced from Korea and Austria. So that's why they sit in the rest of the world. So that will always slightly skew our sales as GE royalties grow. And the second part was that the ScanNav fetal check sales went to Africa. So they also sit in the rest of the world. So that's obviously given us very high sales in rest of the world. The reality of the AI sales is that a large percentage of them are in America. America does drive a lot of the purchase of expert machines, etc. So they would be skewed more across all regions. But in terms of the way we report it, that's how we fix the reporting. And so that's why there's a skew. Second question was also, what does significant growth in AI sales mean, please? And that is that we expect them to double in 2024. Okay. Right. So question from James. What's been the primary driver of the AI growth, and is this sustainable? So I would say absolutely it's sustainable. We think we're at the early stages of it. So we have, as you know, I think we've said that we've got 3 main products and 1 product that needs to be approved. So obviously GE is part of that product line. And from I hope you remember from the slide, was showing that this year, at the end of the year, we've had some significant operational announcements. The fact that our software is now standard across the on the expert ultrasound machine, which makes up about 1/3 of GE's women's healthcare machines. The fact that last month they announced that it was now going to be standard on the signature range, the main signature product, means that we believe that that's just the start of the GE revenues growing materially. So that's number 1. Number 2 is we believe we're going to continue the growth of Needle Trainer and our classroom to clinic peripheral nerve block product. So between the 2 of those, we're forecast that they're going to go to £4 million of sales this year. And then in the future, we see a growth line coming from our ScanNav fetal check, when that we're just reviewing and agreeing how we're going to commercially make that product available, what's the regulatory pathway, etc., and what's the timescale for that. But if you're looking at what's going to happen in sort of 25, 26, 27, then fetal check is going to be a part of that revenue driver. And then finally, you've got the potential for a liver product coming out in sort of 26, 27, 28. So all of those we believe will drivers of product growth. But the products in the marketplace now, we are expecting to grow considerably. Okay. So second question from James, where are you focusing sales efforts globally, with the US and China being vast markets, say, versus the US? Well, we have focused on the US. It's not easy building a US sales team. That's why we've set up a US office, have the head of sales that runs the team there is American, based in America. We've supported that team with an investment in both space and people and support and salespeople expansion. So we've now got 11 people in America. So we're very focused on making sure the American side of the business is going to keep growing and that doesn't get held back by the support that's in there. And then we work with resellers in China. We have 1 reseller. We just signed a new reseller on Needle Trainer. So we do think China will start to come back. It has been a difficult market over the last 3 to 4 years, affected by a number of things that have depressed sales, COVID being a big one, the anti-corruption drive, that had an impact on congresses and then exhibitions, which all suppressed sales. But we do see China coming out of that. So we've got our fingers crossed that China will show growth this year. Next question from David. Is your PMB product compatible with all ultrasound machines? It's compatible with most. Importantly, it's compatible with the main ones in the marketplace. So Sonosite is, I think, got about 40% market share. GE's got about 30% of market share. We're compatible with both those. And then you've got Mindray, etc. So the majority of machines it is compatible with. Next question from David. You've restated that you're on track to achieve profitability with current cash resources. When do you forecast cash positive trading? Helen, do you want to answer that one on cash positive trading?
Yeah, that's fine. So yeah, we're still iterating that we will achieve profitability with our current cash, and we're hoping that will be the case for 2024. And alongside that, we will be forecasting cash positive trading alongside the actual bottom line profitability. So I know that Stuart's mentioned about the range, so the 14 to 17 million. Even if we get to the 14 million revenue below the kind of midpoint range that we're hoping to get to, we will be controlling our costs in line with that to ensure we still get to that profitable bottom line and, more importantly, cash flow positive.
Thanks, Helen. And I think that's the key. Clearly at the moment we're still aiming for the top of the range, not the bottom. We're just reviewing where we are based on Q1 in terms of the UK and how does that impact. So final question from Stephen. Is the structure of the GE revenue stream recurring or per sale? So it is a per sale. At the moment, ultrasound is pretty much dominated by CapEx purchases. So you don't get recurring revenue out there. And this is a one-off perpetual license that's sold with the machine. So GE, sell a known amount of machines each year. They dominate the marketplace. It's like recurring revenue, but it's obviously not. What it is just predictable revenue on an annual basis because it's GE that is selling the machines and therefore generating us royalty revenue. But it is not a recurring revenue royalty license.
Fantastic. Stuart, Helen, thank you. You've covered all those questions from investors. And of course, any further questions do come through, you will have the ability to review those. And we'll publish those responses on the Investor Meet Company platform. Before redirecting investors to provide you with their feedback, which is particularly important to you and the team, Stuart, may I just ask you for a few closing comments?
Yeah, just thanks everyone for listening. Look, I think I said this on the closing slide before, but I do think we are in an exciting and dynamic market. And I think we're a dynamic player in that marketplace. We've done a lot of investment to become a player in this new space. I think we're starting to see that. Trebling our AI revenues to 2 million was a really important part of that. The announcements about all the operational news flow about GE, about Fetal Check, all relating to these new quite important milestones that we're achieving for AI, say that we should keep this growth going. We look like we're in an exciting place. It is about balancing revenue forecasts with cash and investment, but we've been good at doing that for a number of years now, and that's what we continue to do. So thanks to anyone out there that's supporting us, and if you want to see any more information, just please visit the website or drop us a line.
Fantastic. Stuart, Helen, thanks indeed for updating investors today. Could I please ask investors not to close the session? It should be automatically redirected to provide your feedback in order the team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of Intelligent Ultrasound Group PLC, we'd like to thank you for attending today's presentation and good afternoon to you all.